Hello, I'm Nels Matson, a senior accountant at Kerkering Barberio, and we would like to introduce you to the long-awaited PPP forgiveness application that just came out this past Friday the 15th. We'll do this by defining some key terms and then tell you some of the things that we got more guidance on with this new forgiveness application. So we'll start here with the key terms. The covered period is the 8-week period that starts on the date that the PPP loans were received, so the date that those funds came into the bank account. The FTE, or full-time equivalent test comparison period, which is the period that can be elected as either February 15th, 2019 to June 30th, 2019, or you can elect January 1st, 2020 to February 29th, 2020. Is used to compare your full-time equivalents with the covered period, which we defined above, or we'll introduce you to a new alternative covered period on the next slide. Another key term for this is the wage test comparison period, and that period will be the period of January 1st, 2020 to March 31st, 2020, or first quarter, to compare the wages of each employee to the covered period. Or again, the alternative covered period, which I'll introduce you to, which is new in the forgiveness application. So here is the new guidance. We finally got an answer to what expenses paid and incurred means. So just for purposes of using examples, I'm going to set up when we got the loan. So we received the loan on April 20th. So that is the date that our covered period starts. So for our payroll costs, we now look at those costs, those amounts paid during the covered period. So this can be any amounts paid for payroll from April 20th to June 14th. So amounts paid. But now we get to also choose if we would like an alternative payroll covered period. So this means that if your pay date doesn't start until April 24th, you can align it with your payroll periods as long as they're biweekly or more frequent. So if you don't receive, if your last payroll, if it's weekly, doesn't end until June 19th, you can now use that last period, even though it falls outside of the original covered period. So that's exciting for us. Also, they defined what expenses paid and incurred were for non-payroll costs. So now we can use any amounts paid during the 8-week covered period. So even if you use alternative payroll covered period, for non-payroll costs, we're always using the covered period. So for example, if you had utility payments that maybe you got in arrears of during this time, so maybe you owe for February, March, you can pay those during this covered period and have them count towards your forgivable costs. But they've also said that if we have utility payments or those other payments that are allowable under the forgiveness, if we've incurred those during the covered period, but maybe we don't get to pay them until outside the covered period. So for our examples, our covered period ended June 14th. So we get to, if we have a utility bill that is for June, but maybe we don't pay until July 1st, we can use the 14 days in June to build up those expenses that count towards our utility bill. We still have to pay it though. So that the lenders are still going to make sure that we have that receipt of payment that falls outside of the covered period. But we now know we can include the expenses that are incurred during that covered period. We also got a definition of full-time equivalents. So this is based on 40 hours for each week. So we have to go and dive into each week for each employee on these full-time equivalents. And we are maxed at 1. So if you had an employee that worked overtime, you still will only be able to include 1 on their FTE for the week. And we'll add up the FTEs for each week and then average those out. And again, a maximum of 1 for each employee. We also got an indirect prohibition of employee owner bonuses. So for what that means is they clarified that during, as far as a cap on owner pay, we are looking back to 2019. So the cap on owner pay is 50 seconds, so 8 weeks of 2019 wages. So that's what we're capped at, either the lesser of that or the number they gave us earlier, which was 15,385. And what that 15,385 number is 8 weeks annualized at $100,000. We also got clarification on leases and real. We got clarification that now allows us to take leases for real or personal property. So before, a lot of us were thinking that we were only going to be allowed to count leases on real property. Now we can also use personal property. And an example of personal property would be those leases on copiers or that type of property that you may have and pay a lease on. So now we can include those in forgivable expenditures. If you have any questions for us, please feel free to call and we'll be glad to answer your questions. You can find our contact information on this slide. Thanks.